Oftentimes, a small business owner has devoted their life savings or all of their time to try to get something up and off the ground. Their resources are going to be limited compared to the larger corporations, so insurance is something that can really help them in that time of disaster.
Welcome to the Path to Owning It podcast by Provide, hosted by me, Corey Brown, a marketing leader at Provide with over a decade in supporting small businesses. Whether you're an aspiring or established founder, here you'll find tools and advice to start building your legacy and take your business to new heights. To help you achieve your entrepreneurial ambitions, each month we'll tap into our unparalleled network of industry experts who will join us on our quest to provide the answers to your most pressing questions. Like what you hear? Follow us on Apple Podcasts, Spotify, or wherever else you listen. Today, I'd like to welcome Matt Martin to the show. Matt's a vice president at BSBD Insurance, an independent insurance agency with an innovative model and industry-specific experts dedicated to serving their partners. Matt has 10 years of experience in the insurance industry and has agreed to join us today to discuss disaster relief planning for your small business. Matt, welcome to the show. We're super excited to have you join us today.
Hey, Corey, thanks for having me on.
Yeah, absolutely. As I mentioned, today we're talking about how to prepare for the unexpected when it comes to disaster relief planning. And in light of recent flash flooding, not too far from you, really, in Central Texas, which has impacted, many communities and families, I'd just like to take a moment to express our deepest sympathies to those affected.
Absolutely. I'm on the same train.
Yeah, it's a timely reminder of the importance of proactive planning to safeguard your business, even if one resides in an area that's prone to natural disasters. So with that said, Matt, can you tell us some key components that small businesses should include in their disaster preparedness plans, and why is having proper insurance coverage so critical?
Sure. So I would say, and we're speaking more towards the small business owner at this point, oftentimes, a small business owner has devoted their life savings or all of their time to try to get something up and off the ground. So their resources are going to be limited compared to the larger corporations. So insurance is something that can really help them in that time of disaster. As an agent, my sole job is to really walk those small business owners through the ebbs and flows of what insurance can and can't do, because there are a lot of misconceptions out there in terms of what it can do and maybe what it can't do. I've been fortunate enough to partner with WellCare Financials for several years now, and between the business operations insurance that I cover and the personal financial lines that he can cover, we feel very confident that between the two of us, we can make any small business owner whole in the event of those disasters that are often unexpected.
Yeah. And part of that, I would assume, is something called business interruption insurance. Can you talk about how that works? And are there common mistakes owners make when estimating the coverage that they do need?
Sure. Yeah. So I would say the first thing is business interruption insurance is often kind of misinterpreted. Unfortunately, it was a misconception that got brought to light during the pandemic. For one, businesses were shut down because of the pandemic, or here in Texas, we had the rolling blackouts and businesses were shut down, and everybody called their agent immediately and said, "Hey, business interruption insurance." And the misconception there is, in order for business interruption insurance to actually trigger, there has to be some sort of physical loss first. So pandemics are uninsurable, rolling blackouts are uninsurable. Honestly, the carrier could insure those if they really wanted to, but the price that they would have to stick on that premium, it would be impossible for most small business owners to even carry that coverage. So business income on a high level is really just designed to pay any lost net income for a business owner, whether that's rent, whether that's a bank loan payment, whether that's payroll for employees while the operations are shut down. And it even goes as far as to helping find a relocation space so that they can continue operations as fast as possible. When it comes to exactly how much of that they need, here at BSBD, we have a business income worksheet, as most agents do, and that really opens the eyes of most business owners in terms of things that maybe they didn't know that they would still probably have to pay for, even though they weren't operational. But we really pride ourselves on working with carriers that in the business interruption coverage line item, it actually says actual loss sustained instead of a number, meaning you can give me a number of $1 million. And if it's going to take you $2 million to get back up and going, well, you only told me $1 million. You're going to be mad that you're not getting an additional $1 million, right?
Right.
Well, in these carriers that have actual loss sustained, they don't care what the number is. They're just going to make you whole regardless of that number. Now, obviously, you have to back that up with receipts and invoices and proper payroll bills and stuff like that. But I would say that as a holistic approach, business interruption is incredibly crucial in any sort of property, physical damage type scenario to make sure that you're made whole until you're up and operational.
Yeah. Can you also talk about what kind of specific types of insurance or endorsements small businesses should consider to protect against these natural disasters like floods, wildfires, earthquakes, et cetera?
Sure. So speaking on flood and earthquake specifically, those are two specific policies. It's not something that's going to be included on your standard business owner's policy. So in those two regards, typically a survey is needed for most business owners that don't understand how that process works and whether or not they need it. That survey is going to tell you whether or not you're in a 50-year flood zone, a 100-year flood zone. And then it's up to them, unless it's being required by a bank or by the state or by a landlord, by a lease, whatever the case may be, on whether or not they feel they want to risk it for the 100-year flood, hoping that it never happens during that time, right? Earthquake is the exact same. It'll be some sort of surveyor report that shows the likelihood of you experiencing an earthquake are X, whatever that case may be. The other piece of that, wildfires, I think is an interesting one because in insurance terms, it's a fire. So fire is covered on a standard insurance policy. So when you think of a wildfire, you're like, okay, well, that's obviously covered. Well, it is until it isn't. So insurance likes to use the word, it's covered until it's excluded. So anything on the insurance policy that you read, you assume that everything is covered until it specifically states that something is not covered. Wildfires is becoming one of those, especially on the West Coast where we've had all the severe wildfires that have gotten out of control. There are carriers now that are saying, you're in a wildfire zone, we can't cover you at all because we're not willing to take that risk. So then it becomes our job to find the carriers that are still willing to do it or find a standalone wildfire type policy that can cover them in those areas. So at the end of the day, you're going to get information from surveyors or landlords or loan officers, whatever the case may be, to make that accurate decision. But it is important to understand that a lot of those are their own standalone policies. They're not just something that's included in what you pay for.
Gotcha. I'm reminded my home policy just renewed, right? So I got this giant packet of covers this, that, this. And did I read the whole thing?
Yeah.
No, probably not, right? So I would imagine that's most people. So how can business owners assess their vulnerabilities and ensure their insurance coverage aligns with the risk that they really do face?
So I would say, part of my job as an agent is to help do that, right? So, there are potential threats and they are different for geographic, for industry. It doesn't really matter which area of the country you're in or what business operations you have. You all have, some sort of vulnerabilities, but the problem is they're different for every industry or every geographic location. Texas, we don't have the earthquake problem, right?
Yeah.
You got different sort of stipulations. In Texas, workers' comp is not required. So a lot of people in Texas don't carry workers' comp, even though they should. So at the end of the day, it's my job to advise on how to mitigate as much risk as possible and then let them make an educated decision at that point.
Yeah. So this might be a loaded question, but let's just take like the average small business owner. They're coming to you and saying, what do I need to feel protected? And obviously that varies quite a bit depending on where they're located. But can you just give us like a quick rundown of what are like the 3 or 4 endorsements or policies that you really think they should have?
Sure. So we see 5 on a typical across the board basis. One is the general liability, meaning slips and falls for customers. That's the biggest line item that you see on a general liability policy. Property coverage is going to include, if you own the building, you're obviously insuring the property. But if you are leasing the space, it's the finish out and construction that you had to do. It's all of the equipment, inventory, desks, chairs, furniture that are the inside. The third one is workers' comp. Workers' comp is required in the majority of states, and it's something that we push pretty hard here in Texas because unfortunately we've seen it in an office space where somebody slips and falls and hits the corner of their head on a desk. It's something that they're like, workers' comp is me getting injured on the job. I work in an office. That's not really possible, right? So workers' comp is something that we see. The last 2 are more on the optional side across the board, but whenever we're having the conversation of how to mitigate risk, they're very important. One is cyber liability. Unfortunately, with ransomware, cyber attacks, data breaches, a word we call social engineering, meaning phishing emails basically is what it is, one of our highest claim scenarios. So that's something that we push pretty heavily on as well. And lastly is an umbrella policy. The umbrella policy is a common misconception in, I think, the insurance world, thinking, I'll just buy an umbrella policy and it protects everything. Well, that's not quite how the umbrella policy works. Umbrella policy actually sits on top of policies. So say your general liability is $1 million limit, that umbrella policy would give you an additional, call it $1 million on top of the $1 million. It's really for catastrophic type events, which is, kind of the purpose of this whole conversation in terms of, if you have a customer that slips and falls and becomes severely handicapped or worst case scenario dies, you get a claim that's $1.5 million. Well, your general liability tapped out at $1 million. You still have a $500,000 that needs to be paid. Now, carry the umbrella and that kicks in and pays for the other $500,000, or they can come after you personally for the additional $500,000 that you could just be on the hook for, which can sink especially some sort of small business owner that doesn't have $500,000 laying around.
Yeah, absolutely. I think that's super important. So let's jump a little bit to when a claim is needing to be made, right? Let's say there was some sort of catastrophic disaster. Are there any practical steps or documentation that can help streamline that claims process after a disaster strikes?
Sure. I mean, there's 5 legitimate steps, but I think before you get to the 5 steps, I think what you do internally is a big factor in that, in terms of keeping track of your inventory, keeping track of make, model, serial number of all the equipment or vehicles. I think having internal data that is stored somewhere is always beneficial. In the event of a total loss, a tornado comes and wipes it away, then you may not remember all the equipment that you have in there, and then you get back up and running and forget that a very important piece of machine didn't get listed on the claim, and now you're searching for extra money, right? And that's a problem. But in terms of the claims process itself, I think number one, the important thing is to notify us as the agent immediately, as soon as humanly possible, because we have to then go to the carrier. The carrier has to assign an adjuster, and the adjuster still has to reach out to you, set an appointment to come out. We're looking at a couple of days in a fast scenario for them to make their way out there, right? The second part of any claim scenario, I think that it seems pretty self-explanatory, but it's often overlooked in terms of secure all the property that was damaged. So if you've got a broken window, put a board up to prevent any further damage, or you have a water leak, go out and turn off the main water line so that you don't have any more damage that's already out there. So mitigate anything that you can, even after the fact, to try to help yourself down the road. The third thing is document absolutely everything. You're taking pictures, you're taking videos, anything that is damaged, do not throw those away. Keep that so that the adjuster has that evidence as well to make sure that you get made whole in that regard. Number 4 is just keep all receipts, all invoices, any sort of money that is being spent as it has occurred before you get that check from the insurance company, right? Because unfortunately, you have to prove it, right? They're not just going to trust you and trust your word. And then lastly is go ahead and start getting those quotes from licensed contractors. And it's helpful to have multiple quotes at that point. That way, when the adjuster gets there and you're already in the process of, it's kind of twofold. Actually, the contractor can help you maybe even get money for things that you didn't think of before. But second, that adjuster doesn't have much leg of a stand on if you got a couple contractor bids that say, hey, it's going to cost X and you're not willing to come up to that number. Well, this is how much it's going to cost me. So get bids from those contractors as soon as possible.
Yeah, that's great advice, Matt. We've discussed the practical steps of a disaster relief plan and documentation that can help streamline the claims process. But when we return, we'll share a real-world example of how proper insurance saved a business during a major disaster. More with Matt Martin right after this. Are you fresh out of school with big dreams and ambition to achieve them? Or is your current business bursting at the seams and it's time to expand your legacy? If you tend to challenge the status quo and shoot for the moon, Provide's SBA loan may be for you. Our dedicated team of small business experts will work with you to make your ownership dreams, no matter how big, a reality. To get started, visit getprovide.com to see how our tech-enabled small business financing and banking can work for you. Again, that's getprovide.com for when your aspirations of business ownership exceed traditional limits. I'm Corey Brown, and this is Provide's The Path to Owning It podcast. We're back with Matt Martin, Vice President at BSBD Insurance, to discuss how one business's preparedness plan saved them after a natural disaster. Hey, Matt, can you share with us a real-world example of how proper insurance coverage saved a business during a major disaster?
Yeah, I mean, those are the things we hold to our heart there, because that means we did our job pretty well. I think it's an important question because I think it goes back to the cyber type policies, right? So you have your required policies for slips and falls for customers, or property, a tornado comes and rips it down, or work comp where somebody gets injured. Those are all pretty standard policies, right? So the number of claims that we've seen that have saved those businesses are through the roof.
Sure.
I think an important part of that is the optional, or the ones that are encouraged by the agent or maybe by the peers in the industry to say, hey, you should probably carry this insurance. Cyber liability to me is the one that stands out the most. Actually, within this last year, we had a dentist office in Maryland that actually, we call it social engineering is what the insurance world calls it, meaning the front desk person gets an email from what looks like a credible vendor. It says, here, pay this invoice. In this case, it was a piece of equipment that was worth $75,000. And it was click pay, and that money's gone to an offshore account and it's never seen again.
Wow.
Well, they opted into the cyber policy, and the insurance company stroked them a check for $75,000 to make them whole. In a small business setting, $75,000 could mean a few less employees for the year. It could mean hopefully not shutting the doors, but it could cause some sort of catastrophic event. So I think that's where the optional coverages or the coverages that are pitched in terms of, hey, you should probably really take these even though nobody's requiring you to take them. And those types of claim scenarios that happen, you're like, all right, I feel pretty good about doing my job there.
Yeah, absolutely. This podcast, we're focusing kind of on natural disasters, but I mean, cyber attacks would certainly be a disaster for a business. So I just quickly, how often are you seeing these types of things happen? I would imagine it's on the rise, right?
Yeah. So from a disaster perspective, tornadoes, hail, windstorms, floods, we're seeing at an increasing number every day. It feels like that's becoming more prevalent. Whether in North America, Texas, it doesn't really matter where you're at, is getting significantly worse. So we're seeing that on the rise. But I will tell you that cyber liability is at an exponential rate in terms of how it's increasing. Hackers are just getting good at what they do. They're sitting in people's emails. We've seen it where they've been in the email for months learning how they type, what the signatures look like, how fast they respond, the verbiage, and then they'll pick their time and they finally decide that they want to pick that day to send the one email that looks really good, and hopefully they get away with it. So yes, it's increasing fast.
Yeah, that's incredible. I feel like we could do a follow-up episode just solely on that. I'm sure that would bring for some interesting conversation.
Absolutely would.
But back to natural disasters. Can you tell us how insurance companies evaluate risk for businesses? I mean, you mentioned surveying and that sort of thing a little bit earlier, but is there anything owners can do to potentially lower their premiums when they're in those disaster-prone areas?
Kind of a twofold question, right? Like, how do you evaluate your risk?
Yeah.
We're fortunate on our side of the house where insurance carriers have every really piece of data that they possibly need at their fingertips for geographic to industry. It doesn't really matter. So a lot of the information, they go ahead and let us know, hey, this is a potential risk. So it's our job then to go to the policyholder and say, hey, these are your risks the carriers already see. And then here's some risks that we've seen just from a claim scenario. Sometimes those two don't marry very well, right? We have to be able to talk from both sides of the mouth. But when you start getting into lowering premium, it's an interesting conversation because I firmly believe in the insurance world, you kind of get what you pay for.
Yeah.
So I don't enjoy talking about how to lower premiums. I like to have the conversation of maybe here's some potential threats and some potential risks. Now, which of those are you willing to be on the hook more for, right? So
interesting.
If you don't want the flood policy because you're in a 100-year flood zone and you don't think it'll happen to you, sure, you can lower your premium. You can take on some risk there and take the risk that doesn't happen. I think it all comes down to what the customer is willing to take risk on. Now, I will say there's one avenue where lowering premiums we feel is actually a good thing. So anybody that has a $500 auto deductible, are you really going to file a claim for $750 for the broken taillight? Are you going to make the insurance company cut you a check for $250? Now, to some, that might really matter.
Sure.
And they need that $250, but you're out of pocket $500, so you're basically paying for it yourself anyway. And now you have a claim on your record that hurts you for 3 to 5 years. The claim scenario doesn't always match up. So having the deductible conversation of what number would make you feel uneasy enough that you're definitely going to want to file a claim. So, some of them, $1,000 is their deductible because if it's a $1,500 claim, they're like, I don't really know if I can afford $1,500 out of pocket. I can afford the $500, but we've seen it from anywhere from $2,500 to $5,000 on an auto. A lot of people don't like insurance, and that's perfectly fine. Nobody likes it until they need it.
Yeah.
And then whenever they need it, they hope it's done correctly and in a way that they want it done. So that's kind of the gist of that.
And I struggle with this personally. I would imagine a lot of people do, is like finding that balance, right? Where you're like, what's the area where I know I'm comfortable, but with also like the amount that I want to spend, and how do I know that that's accurate? And I don't know that you'll have an answer for that, but I would imagine that's a common struggle.
It is. And it's really not as straightforward as it would feel like that should be. I think the caveat to that also is people think, all right, well, if I have a $500 deductible, if I go to $1,000, I'm doubling my deductible. Surely my premium will be cut by a third. In reality, that's not always the case. You might save $100 a year by doing it that way. And every carrier is going to be different on how they see that. So somebody will say, hey, I want a max deductible because I want it as cheap as possible. Well, The difference in having a low deductible to the max deductible on a $10,000 policy might only be $1,000. I mean, it could be something that's as minimal as that.
It's a good point. What are some common gaps in disaster coverage that small businesses often overlook? And is there anything that owners can do to kind of identify these gaps?
So there are things that, whether a loan requires, a landlord requires, or the state requires, meaning, general liability is required. Property coverage is required. Typically, there's not many gaps there if you've got an agent and a conversation with the customer to really dive in and do a good job. The gaps come in the cyber liability. It comes in the additional premium for the umbrella policy. Knowing the ins and outs of a business on whether or not you need commercial auto, even though you don't own any autos. Unfortunately, it's one of those deals where if your front desk lady runs to the post office and comes back and gets in a wreck, well, you don't own that auto, but she was doing work for you. She's going to hope that you helped and step in, right? So higher non-owned coverage is something that a lot of people don't really consider, but it's something that's being thrown around and thrown in most standard policies these days. So now, I would say from a gaps perspective, you have to try to skirt around in order to create gaps. I feel like the carriers are getting pretty good at pinpointing from an industry perspective on what coverages that they see.
Yeah.
If you've ever combed through an insurance policy, you'll see money in there for things that's like fine arts, even though you're a business owner. If it gets swept away, you have $2,500 for fine arts. And it's like, well, they've obviously seen it enough times that they're like, we've identified that as a gap and we're going to go ahead and throw it in as a normal coverage.
Sure.
You may never use it, but we've had it happen enough times where we're going to cover that gap.
Yeah. And you as an insurance agent wouldn't want to offer policies that knowingly have gaps either, I would imagine, right? Because you want your customer to be happy. And
that's exactly. And I think that's the perk of us being a broker.
Yeah.
We're able to go to multiple carriers and find out who's willing to give the best coverage for the best dollar.
Absolutely. Now, we help a lot of new business owners, first-time business owners when they're just starting out. So how can new business owners balance that affordability along with adequate coverage when they are just starting out and maybe don't have as big of a financial backing?
Sure. So we see that all the time, right? So even if it's a loan scenario or it's their own money, cash flow isn't there yet. So spending a whole bunch of money on insurance isn't something that they even have the ability to do.
Right.
But yet you still want to make sure you're protected. I see this a lot where somebody is nervous because they see the bill, not really understanding that you can pay that monthly. Insurance is forecasting for the next 12 months. And a lot of that is a guessing game. And if you're a startup or you have never been in business before, it can be a complete guess, right? So a lot of times what I'll say is they've done some sort of business plan, right? So let's find a conservative number that you feel you're going to hit. And I will set a reminder in my inbox to reach out to you in 6 months to see where we're tracking. If we're tracking to be double, let's go ahead and make that adjustment. That way, at the end of the year, you don't get an audit from your insurance company and you're mad because you did double what you told me.
Yeah.
A, that means you're doing better than you thought you would. So congratulations. But B, don't forget, we tried to save you money on the front end to be conservative so that we could make these adjustments on the fly. So it's an interesting conversation to have. And it's a difference in insurance not looking back 12 months, it's looking forward 12 months. So it's a little bit of a guessing game. And that is a frustrating part about what we do, especially for somebody that's a startup or just a small business in general.
Yeah. And right along with that question, how often would you say businesses should review or update their insurance policies, especially as they grow and diversify their operations?
It's a great question. And going back to the small business owner that's opening the door and has no idea how much payroll or how much sales he's going to do, let's reconvene 3 months after the policy gets started. Let's reconvene in 6 months after the policy. I would say for the small business owner, I think you can't hear from us enough in that regard just to make sure that you're up and running it the way you're supposed to. Now, once you get into year 3, 4, 5, where you've got a pretty well-oiled machine, a yearly review is sufficient unless something drastic changes in your business, buying massive amounts of equipment, getting more lease space, or you see sales skyrocket. You want to make sure that you're adequately covered in those regards. But we pride ourselves here at BSBD in terms of our renewal packet that you get every single year. Dives into the 4 questions of, here was payroll last year. What do you anticipate payroll next year? Here was sales last year, sales this year, property last year, property next year. So yearly is sufficient for those that feel comfortable with insurance. But I'm under the impression of, if you feel like we need to talk every month the first year, call me. We can absolutely have that conversation.
Absolutely. And Matt, finally, what advice do you have for small business owners who might feel they're too small to need comprehensive disaster insurance?
In my world, the bigger the account, the more premium, which means you're going to make some more money, right? I think most big time agencies see the dollar value and that's what they want to go after. I'm very thankful here at BSBD that they allow me the opportunity to go after the small business owner because I do feel like it's an opportunity to educate. And with education becomes the relationship, and then the relationship 10 years down the road, I hope you're doing $1 billion a year. And now you trust me to really take your business because I was the one that was helping you educate from the beginning whenever you had no idea what you were doing, right? So I think there is a very strong niche that I love being a part of. And I think more agencies should be a part of in terms of that's too small business owner. They need insurance more than some of the bigger companies and they need the education. And honestly, it's cumbersome. When you look at an insurance policy, it's legal jargon, right? So
yeah,
having the opportunity, I think, to educate and simplify some of those coverage items and explain to you exactly what they are. I don't know. For me personally, I take pride in it and I think it's a great way to build a relationship. And that's kind of how we've operated our agency for 12, 13, 14 years now. We're a relationship agency and I think it bodes well long-term. I think that's more the deal. It's, do you want the short-term gain or do you want the long-term relationship?
Yeah.
And it's all depending on how you want to see that.
And Matt, if anyone is listening today that wants to start to talk to you about starting a relationship with BSBD, how can they get a hold of you?
Yeah, anybody that would ever want to reach out to me, I'm always available. Email's probably the best way, Matt, M-A-T-T, at bsbdgroup.com. Happy to even have an educational conversation. If you've had a relationship with an agent for 20 years and you just want consultative advice, I don't mind that either. So all of the above would work just fine.
Awesome. Well, Matt, thank you so much for sharing your expertise with us today. You certainly have educated me as well as anyone listening to this podcast about disaster relief planning. So thanks so much.
Happy to do it. Thanks for having me.
Thanks for joining us. The path to owning a business is a nuanced journey. We hope you discovered something in this episode that eases your path to success. If so, leave us a review on Apple Podcasts or Spotify. Have a topic you'd like discussed in a future episode? Drop us a line in the comments section or send us a message on social media. If you're ready to take control of your future and start building your legacy, be sure to visit getprovide.com. You can view our resources page for more helpful tools, learn how our all-in-one financial and banking products can help you on your path to business ownership, and pre-qualify for financing in under 2 minutes with no impact on your credit score. The Path to Owning It is brought to you by the team at Provide. And it's produced by PodCamp Media, branded podcast production for businesses. PodCampMedia.com. Producer Dusty Weiss, editor Matt Covarrubias. For Provide, I'm Corey Brown. Thanks for being on the journey with us.
Provide is a division of Fifth Third Bank, National Association. All opinions expressed by the participants are solely their current opinions and do not reflect the opinions of Provide, its affiliates, or Fifth Third Bank. The participants' opinions are based on information they consider reliable, but neither Provide, its affiliates, nor Fifth Third Bank warrant its completeness or accuracy and should not be relied upon as such. This content is for informational purposes and does not constitute the rendering of legal, accounting, tax, or investment advice or other professional services by Provide or any of its affiliates. Please consult with appropriate professionals related to your individual circumstances. All lending is subject to review and approval.